Good day, fellow investors. ADM is part of our YouTube portfolio. Earnings are out, so let's do an update. If we check the stock price since we bought it so recently, ADM really did well. There was a slowdown, commodities prices were going down, so the market was selling off similarly to Berkshire, but then again, from here, it is going up again significantly, as it looks like that food prices and crushing margins and everything will remain more stable over time. If we look at our portfolio on Interactive Brokers, you can support the channel by checking that international broker if you're interested in the description below. We have here ADM. I started with a medium position and now it's already 4,000. Up on a 20% start. So let's see what's going on, what is impacting the valuation, how are earnings and how that works. So second quarter earnings call. If we look at the numbers, 2022 was good, really good compared to 2021, practically doubled earnings, increased EBITDA by 20-something%, great return on invested capital. Everything looks well, and especially here the crushing, when it looks to segment profits, did really well as crushing margins exploded on the upside. So all looks good. Working operation cash flows in half a year, 3 billion. That's something we have to compare to the market capitalization, which is now 48 billion. But if they make 6 billion in cash flows, that's a single digit cash flow P ratio, so a double digit cash flow yield there. They have plenty of liquidity, a lot of inventory. So all numbers look great from the perspective. And then maybe they use the wrong color, but 1 billion in share buybacks to be done in 2022, plus the 90-year dividend, 8% increase in dividend. That's 2% buyback yield, 2% dividend. So that's again a rewarding to shareholders of about 5-6% from these levels, plus the growth ahead from the business perspective. So nothing wrong there. And the expected full year earnings are at $6.5 per share. So that is a P ratio of 12-13, still below market, still very attractive. If we look at the conference calls, they don't see any significant clouds on the horizon right now. All looks well. And if we look at Archer Daniel Midland's at the financials over time, we lost the Morningstar financials, so I went to Seeking Alpha. This is premium, but I made a deal with them that if you click on the link in the description below, the Pro should be $99 per year, so a 60% discount if you use my link in the description below. But there we have the 10-year financials that we always used. And if we look at the 10-year financials, so net income, we can see that net income over the years was around 1.5, 2 billion, and now it exploded to 3.5 billion. Now things are really good. And the question is, will it revert to the mean here or it will stabilize at a higher level? To be conservative, and if margins return to normal, I will increase the earnings here for Archer Daniels to 2.5 billion, let's say value creation, plus 5% growth ahead as inflation, as they are reinvesting 40% of cash flows into growth. So that should be positive, but this might be a little bit more negative, even if they don't see clouds ahead, maybe in 2 years, you never know with these cyclical businesses. If we go to our table, then we have Archer Daniel Midlands here from a valuation perspective, and you see that I had 2 here in valuation. The market cap is 40 billion, now should be 48. Okay, it went higher, but the intrinsic value on a lower valuation is around 33. If the market is more exuberant, 45. But I'm going to change this now to 2.5. Let's say that they have a higher number, and if we change to that, then the market cap, the risk and reward is close to the market cap, so still offering an average 10% return, discount rate, expected return for the investment. So nothing bad there, so I'll just keep it in the portfolio at current levels. If it goes higher, I might manage some risk, but for now it remains a hold, especially as they said, good times and no clouds ahead. So good business, great numbers, all well, remains a hold now for me, and will continue following it for the next years. It is a great business, 90 years of increasing dividends, they will likely continue. It is an essential business. It brings food to your table. They constantly invest in new things. Now have bought some probiotics companies, so they are constantly structuring adjacent businesses on their products, increasing the dividends, been doing that for 40 years. Nothing wrong for ADM in a well-diversified global portfolio. Thanks for watching, and I'll see you in the next video.